Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, and I have Jerremy Newsome on the line. He is CEO of RealLifeTrading.com. He's a 26-year-old trader attacking the markets here. Jerremy, how you doing today?
I'm doing great, Joel. Thanks so much for asking me. You guys are killing it this morning.
Okay,
Doing well.
Thank you. So I got to start out with how you got your interest in the markets, and that comes from the movie Forrest Gump. And so we were racking our brains this morning. We all love that movie. That's a classic. You're a youngster. Your parents probably turned you on to it, I bet, right?
They did, yeah, they did. I'm a big movie fan. I like movies, cinematic adventures, if you will. Forrest Gump, my number 2. And do you remember that part, Joel, where at the kind of towards the end, he got the mail from Lieutenant Dan, and he said that they invested in some fruit company. They didn't have to worry about money no more.
Okay.
And it was Apple. Yeah.
He invested in a...
Oh, my gosh, I totally remember that. That makes so much sense.
So I remember asking my dad, I was like, what fruit company is he talking about? Like, what does he mean? Because it just kind of, threw me for a loop. I had no idea what he was talking about. So he mentioned it, and, then my dad started telling me about bonds and investing in the market. And I was a poor country boy, Joel. I grew up in the deep south of Georgia. So it was really just interesting to me how, someone I related to, like Forrest Gump, could become, really wealthy by investing in something. It didn't make sense to me. So it was really cool.
And how old were you?
I was 7 or 8 around that time.
Wow! And then so that sparked your interest. And did you go to college? Did you get an education, or what did?
I did go to college, not at 7 though. I ended up picking blackberries from like 7 to like 15 and sold them, door to door for $1 to try to save up some money to invest. And so I started investing when I was about 17, 18, and that was about in 2008, and kind of lost. I pretty much lost it. I lost all of it. So then I wanted to learn what to do. Yeah, so I went to college because I thought if you got a degree in finance, you would learn, trading in the stock market, Joel. So I went to the University of Florida, and I graduated in 2009 with a degree, but I didn't learn anything about the stock market at all, like nothing.
So how did you learn about it? I mean, tell us about it. How did you learn about it? What books did you read? Who are some of the people that you like to follow?
Well, I actually went around the gamut for a while, for about 3 or 4 years. I did a lot of research on, Nick was talking about Twitter, and it was interesting. My sentiments and his sentiments are very, very similar on Twitter right now, actually, when Nick was talking about it earlier this morning. But, I did a lot of education. There's a lot of people, especially in Nashville, that I follow and talk to. Steve Burns is one of them. I'm sure you've had him on the show and talked to him before. Rachel, I forget Rachel's last name. She has Sassy Options, on Twitter as well.
Yep, she's good.
Also a frequent guest on our show, yep.
Yeah. So I learned a lot from her. Anne Marie Bain was one of my biggest mentors as well. The trading book. I don't know if you are familiar with Anne Marie,
I mean, what are you doing? Are you reading our guest list before you come on the show, or what are you doing here, Jerremy?
Well, I followed you guys for a while. I kind of, stayed in the background for a little bit, listened to you guys just being absolute rock stars, and then I figured I was like, you know what, I need to join this crowd of awesome people. So
wow.
I appreciate the opportunity, truly. But yeah, it took me a few years to really get it, but I finally stuck with it, and I was just asking around. And I'm one of those people, Joel. I was the kid in class who was
always
really,
asking
really
questions, right? Yep.
Mm-hmm. Yeah, that was me, man. That was me. And so anywhere and everywhere, I was just asking. I was never afraid of seeming like an idiot or being dumb, because that's what Forrest did. Forrest always asked people questions. So that's the way you learn, And so at this point, I've learned as much as I need to really get a solid understanding, and I was able to open up a company just a few weeks ago. So it's been an incredible experience.
Yeah, unfortunately, I was a kid that was annoying in class that turned out to be the adult that was annoying too. So hopefully you can shake that. So you talk, let's just talk about your strategies. Technical analysis. I mean, is it technical, fundamental, 50-50? Do you lean one way or another? So let's start with that question.
That's a great question, man. I probably am 99.9983% technical with just a smidge of fundamental every now and then. And the fundamental will come in if I'm doing a long-term investment, kind of like Nick was talking on Twitter. If I understand what the company does, I won't invest in Twitter personally more than 2 years just because I don't understand their fundamental data right now. But other companies, like Apple, I'm going to buy Apple all the time. Anytime it goes down, it dips, I'm going to buy it because it's a fundamentally incredibly strong company. But yes, the vast majority of what I do is purely technical.
What kind of technicals do you look at? I mean, do you start with a shorter time frame and move out, or do you start with the long time frame and then move back in?
That's a great question, man. Actually, what I do, Joel, is I look at approximately 1 year, give or take, and I just say, is it going up, is it going down, is it going sideways? So then immediately, I kind of have an idea. Like right now, you have ES, the E-minis on your chart. It's going higher, right? You're making higher highs and higher lows, so it's going up. So you should have a bullish perspective until something changes. But candlesticks and gaps, I think you could probably sum my trading up into those two things. The sentiment of candles, because they show visually how people feel. Are people making money? Are people losing money? Did someone just get punched in the face from last night and they're losing tons of money? So now we need to be short, or we need to be long because all the shorts are buying the cover. Like some beautiful gaps that we've had on Whole Foods lately, or Walgreens, not too long ago, or ACHN yesterday. The gaps that really scare people. They invite people to trade in a panic, and I like following the crowd quickly if I'm day trading. So, gaps. I look at about a year or so, and then I'll zoom into the hourly and then to the 15, and those are the three time frames that I live on usually. And every now and then I'll take a sneak peek at the weekly.
Okay. So you do swing trading and day trading, and then longer term portfolio trading as well.
I do, yeah, I do. I mostly focus. The majority, I would say, 90% of my trading is anywhere between 2 minutes to 2 hours to somewhere around 3 or 4 weeks, and then I'll have the long term stuff. Like the Apple positions that you're just holding on to.
Yeah, you forget about it. Yep, you forget about it. Okay, let's just move on here. I mean, this has been a tricky market this year, and you had that quick dip in October. You had a snapback rally that people thought was quick until you had that dip last week, and the rebound off that made the other rally look like at a snail's pace. And now you get good GDP numbers here. You're coming up near the $2,100 level. I mean, what do you think is finally going to make this market have a significant retracement, and what is your timeline?
That's such an amazing question, Joel. Truthfully, with this market, I have been relating this market for a few years to the 2000 tech bubble. With the amount of IPOs that we're getting and the evaluations of a lot of these tech companies, I mean, you're getting GoPro, Yelp, Alibaba's giant IPO. I mean, some of Zillow, some of these things that are just overvalued so vastly and have been skyrocketing. Just like if you look at, it's not a tech company, but CVS. The chart on CVS, it almost makes me giggle. Because it's so bullish. There's so many things that feel like the 2000 tech bubble. And realistically, I don't think that there's going to be a catalyst. And I think that's what's going to scare some people. The catalyst, in my opinion, is going to be public sentiment that drives the market one more very, very strong thrust higher. And I think that that's actually going to be coming in the next 2 to 3 months, where I think we're going to have a nice, cute little surge into 2015. Very, 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 very dainty, very pretty, if you will. And, there's a lot of people are going to start hopping on. You're going to get some 2015 selling. 2015 selling is going to come in for taxes and all that kind of jazz. And then sometime around mid-February, you're going to get another probably likely stronger thrust higher. And that might be truthfully the last thrust, because on the general market, we are so, in my opinion, overextended. And we need a 10 or 20% correction, Joel, would be massively healthy, in my opinion.
Yeah,
It really would.
yeah, I know. Believe me, I know there's a lot of people waiting for that. So, how would you play it? Would you even like dump your Apple and some of your longer term stuff, and maybe switch to a fully short position, or are you still in for the long haul? You're a young guy. You're going to keep that core stuff. You're just going to try and supplement your losses in your overall portfolio with more short term short trading.
It's a very good question. Yeah, that's more than likely what I'm going to do. My overall thought process is, there's so many different age groups out there who invest, and the majority of them, somewhere between the ages of 45 and 65, is kind of the main demographic for investing. And in my opinion, the longer-term portfolios, we're in a location where, people expect to drop, people, quote-unquote, need a retracement. But in my thought process, this is a great, great time for collar strategies because we're so extended. And pretty much the majority of things that you buy, unless it's like Cliffs Natural Resources or United States Steel or something, the majority of things that you're in should have positive equity, And so if we're hopping into a collar, you're selling covered calls, February, March, and you're buying some protective puts just in case the market does roll over. Kind of that's my time frame is, late April, mid-May, give or take.
Mm-hmm.
I think that, longer term, if I'm in Apple or if I'm in, ExxonMobil longer term or Alibaba or Amazon, I do think, in my opinion, that it would be prudent to protect yourself because the market is so high. Even if it doesn't go down, okay, you know what? You bought insurance, just like your house insurance. If your house doesn't burn down, thankfully, you have protect yourself in case it does. But the market, man, so extended. Getting into a protective collar, selling covered calls, buying protective puts, you have positive equity in the majority of your longer-term positions, or at least should. I think that that's a very, very valid step to take in a lot of these situations.
And how did you learn your option strategies?
I learned the option strategies actually again through just some going online. InvestedP is a great tool. It's a free resource. It's very, very useful. I've had other experiences with other education companies online. I'm very familiar with what Options Animal does, TradeSmart University. I've had a lot of experience, again, Anne-Marie, she does a lot of things with options, especially weekly options. And it's just, kind of going around, man, picking and choosing from other people. Like I said, there's so much information out there. And, it's just about trusting people at some point, but at the same time, just understanding what do they want, why are they teaching you, and just simply being honest with them and saying, hey, listen, I just want to learn from you because I think I respect you as a trader, as a person. And once you have their respect, people will teach you pretty much about anything.
Right, and then you got to put your own twist on things, as well.
I do. I do, exactly. But InvestedP is a great free resource. I mean, it's really, anytime someone would mention something on Twitter or Facebook, Joel, I'd be like, what? I'd say, what the heck is that? How'd I read Investopedia? And,
there it
it's
is.
there. Mm-hmm.
Okay, so you have an opinion on these big box stores like Best Buy, Office Depot, Radio Shack, and I guess you're questioning how much longer will they be around? Let's talk about your thesis on that and if you're putting your actions into the market.
I don't know if I would call it thesis, but I have an interesting opinion for sure. I'll ask you this question, Joel. When's the last time that you went into an Office Depot or an Office Max?
Probably about a month ago to buy some printer cartridges because I wanted to make dinner.
Yeah, and how many people were in there, like customers?
Half a dozen maybe. I know there was there was no wait at the checkout line.
Right, and that's in my opinion, that's kind of a problem. When you go into a company, you expect or you should see there are some people there generating revenue. I mean, I went last night. Don't tell my girlfriend, but I was buying her some stuff, and she wanted something random. I don't know what it was, but it was like this tree lamp candle thing. Apparently, Office Depot sold. So I was buying a new chair for my my trading office. But anyway, I went in there, two people in Office Max, and Office Max, Office Depot, owned by the same company, right? Office Depot owns both of them, if I'm not mistaken. And there's no customers in there, and it's unfortunate because if you think about it, Walmart offers pretty much the majority of what Office Depot and Office Max offers. If Walmart doesn't offer it, Best Buy probably offers the majority of what it does. And if they don't offer it, you can probably get online for cheaper than Office Max or Office Depot in general. And so you have Office Depot, Office Max, Radio Shack, those companies that have been, they're really trying to rebrand their image. And I think that they have some hugely, some really, really, there's some Radio Shack charts that are pulling up now. Some really interesting competition out there from companies like Amazon, who are just really changing the game with the drawing service. You're getting packages in an hour or in a day.
Yeah.
I think that's incredible. It's mind-blowing. And it's cheaper than Office Depot and Office Max offers anyway. So it's a consumer thing. They don't have a brand. They don't have an image. Their customer service is fine. There's nothing wrong with customer service. They just don't have any customers there. It's a service.
Right.
So I think it's an issue for sure on a lot of these companies. I mean, I haven't been into a Radio Shack in years. And I would say that I would argue that I'm one of their main demographics. I have no reason to go in there. I can buy anything I want from Walmart and or Best Buy, which, again, how long ago was it, Joel? 4 or 5 years that people were really touting Best Buy was going to go under?
Right. Yep. And then they came back, and it's an interesting take. Okay, before we let you go, we only got about a minute here, and maybe you've already mentioned it with the collar strategy. Is that your favorite option strategy?
That's actually a good question. It kind of is, yeah. I'm a huge collar fan because you're selling the calls, you're buying protective puts. If it goes up, fine. If it goes down, you're protected. If it goes sideways, great. I really do, especially for longer-term traders, in market highs. I think it is a pretty decent strategy. Probably just covered calls, the collar, but credit spreads, bear call spreads and bull put spreads really are my two go-to option strategies specifically. I have a 70, 72.50 bear call spread on GoPro that's expiring this Friday. I got into that on sometime last week. And it's pretty solid. I mean, it's about 10% return, for about 2 weeks.
Hey.
And the hardest thing was, that's solid, man. That's great returns. And the hardest thing with credit spreads is just not getting destroyed when one goes against you and understanding when to unravel and or when to exit. And just understanding that, man, is a massive component to credit spread trading.
Yeah, seems like you're taking a few tricks out of Nick Shaheen's repertoire, so that sounds good. Just want to point out, Jerremy has his site, reallifetrading.com. He also does stand-up comedy and Brazilian jiu-jitsu since he was 16, so don't think you want to mess with Jerremy here. But it's great.
I'm weak.
Yeah, no, it was a lot of fun talking to you. It's nice to get a younger person's perspective on the market. Seems like you do your homework. You're a Forrest Gump fan, so that you got a lot of fans. you got a lot of fans here. It was great having you on, Jerremy. Have a good holiday, and we are for sure going to track you down after the first of the year and have you on again.
Oh, I hope so, man. This was a pleasure, Joel. You're awesome. You and Verona were so pleasant to work with the last few days. Truly, man, a great experience. Thank you so much.
Okay, thank you, Jerremy. We'll talk to you soon.
My pleasure. See you guys.